day all. Ira Epstein here with your agriculture wrap-up. And this is for one pretty wild trading day today. And it is Tuesday, the first day of October 2019. And we're about 4:15 in the afternoon. Beans, another strong day. And one of the reasons for that is word came out this morning that China had bought about 1 million metric tons of beans again. Now, that still leaves them with another 1 million or so to go on this current license that they just gave out. And once that market cleared that 906 resistance area, it just took off to the upside. Farmers have to be happy, but the question that you have to ask yourself, guys, especially if you're into farming, at what point do you take some money off the table in terms of hedging your product, deciding what you're going to do, forward contracting, or so on? Very, very important. You had an opportunity in July, that got away, now the market's back up. Be cautious. Dollar down a bit today, metals up, and as you can see, the stock market did get itself hit today. In energy prices, we're still down a little bit. Interestingly, Ecuador announced that they are leaving OPEC at the beginning of the year. They'll try to get more money, if you could, by selling more oil instead of paying attention to the quota. Bonds and notes up today a little bit, but I'll get into that in the financial arena where there's a lot to talk about. As you can see, as the market got itself, and we can actually come right here, this week, which was the week of September 13th, it sounds so far ago, but it wasn't. This is how the market looked prior on Friday the 6th. You got over that 18-week average of closes, which turns the bias up. It doesn't mean the trend is up. The bias is up. Market pulled back last week, still stalled out right there. And this week, the market has taken off, breaking through this 906 3/4 zone. As it's done so, you're back into this resistance here. You've been up here before at the 920. It proved to be a lot of resistance, and that's why I started off this video saying what I'm saying. As you can see on the charts, and I'll stand back, this market is taking off to the upside. And as I stay here, you get to see what I'm worried about. This is an area of resistance. It's a great thing. When this market was down into the 850 area, and now you're sitting here 60, 70 cents higher, always remember how important and how the market looks its brightest when you don't take advantage of it. That's my point. Are we trending? No. We have what's called a vertical price rise, and that came about at 881.5, and now you're sitting almost 40 cents up from that particular level. You went over the 200-day moving average of closes. Now, why is that important and on the chart? It's important because when we got up over it here, the market failed. Over here, the market pulled back, and over here for a while it stayed over it. There's no magic. You can get over it and stay over it, but keeping over it for a long period of time, as harvest is coming up, we'll see how that all plays out. And I'm aware, like everybody else, October 10th, the Chinese are coming into town. We think they're coming in to do even more of a deal, but you don't know. I mean, each time we've gotten to this point, we've been, if you will, hurt. And the hurt means we haven't made the deals. The next thing we have to worry about, obviously the harvest. Do we get an early frost or not? We'll be seeing that. But you're getting already, you're October 1st. The word early frost, nah, I don't think that's in the vocabulary anymore. More or less, it could be that the crops that got planted late, maybe they get a bit less yield, but I think the crops are pretty much getting made here. The other thing I'm concerned about as a trader is one of the things I teach when you get up to the upper Bollinger Band, it is an area that the market often sees resistance at. So while you got here and you ran through it a little bit, pretty soon you were coming down hard and you were sort of sorry if you were in the hedging game. And today I'm talking more to the hedgers. I think that's clear. So I'd be very, very careful up here. You're at a resistance point, and that will not go unnoticed by the pros. Interestingly, you're also getting the potential for a bullish crossover. So I'm not talking out of both sides of my mouth, but the 18-day average is getting up towards the 100. So this 888 area is becoming important, and we saw that happen. We got to 881 back here. That's a good number. Overbought? Yes. So you have an overbought market that's hit its upper Bollinger Band, the bias is up, and the market has hit a first upside target. When we come to the meal market, you got through the upper Bollinger Band today. Now, yesterday you went to it, and the question I think we were asking, would we be able to get over it because we have failed each time against it? Well, today you did get over it, and that's fine. And the market got up, hit that 100-day average zone, and sort of stalled out. So now the question is, can you add to this in any manner? The good news is, if you're a trader in soy products, you know that to get an up bull market, you can't have the oil leading it. It just doesn't work that way. It's the meal that leads the market, and today it did that, and the oil was the laggard, down 20 as meal was up $8. That's what you need to be in more or less an uptrend. I look for support back at the 18-day average in the meal, and you are getting into that overbought area. You have a reading over 72. Soy oil is now oversold. To join the parade, prices have to get back over this 29.31 zone. Now this morning, for those of you that take my morning subscriber video, I certainly had one of the better days in months of telling my subscribers what I thought was going to be today and where to react. If you haven't seen my videos, might be something you want to look at. But today, as the market was up here at 29 and a quarter, I'm telling traders, I said, as long as you don't clear this 29.31 zone, I think the pros are hitting this market here, and that's what it turned out to be. In the corn market, you're now trying to run the upper Bollinger Band. That's good. The market has had sideways action, and why this is different than beans is take a look at the momentum here. You have momentum where both numbers are over 80. Both numbers over 80 yesterday. The day before it had lost its embedded, but then it was before that. So in other words, you regained yesterday the embedded reading right through here, and today you're following through. That's still strength. So until you lose that reading, unlike the soybean market, you can run this Bollinger Band. What's the upside if you really get going? I'm going to guess the 100-day average with support back at the 370.5 zone. In the wheat market, you're up to important resistance. You have a market that first is overbought. Second, yesterday, you went up to the combination of the 100-day average and the upper Bollinger Band without a trend. You've got a lower low, higher high. Today, the market challenging that Bollinger Band area, not able to do an awful lot with it, as you can see. It stayed literally right on it, and it is still overbought. Now, can the market kick into an uptrend? Here's the big question. I see it in a resistance area temporarily. In the sugar, we were just talking yesterday, this is yesterday, that if the market reaches, I'm looking for the resistance between right here and that 100-day average with an overbought market. I think the pros are eyeing this to take some money off the table. You got up there today. We'll see if it can hold these numbers any further. Yes, the trend is up, but you're overbought and in stiff resistance. In the coffee market, I think the bulls are trying to grab control. They're trying to find support at the 165 area. As long as the market doesn't take out 99.30, you've got the pattern of higher lows, higher highs. You've already been up to the 100-day average once. If the market lifts here, that number comes into play again. And if you can punch through it, maybe you get to the upper Bollinger Band. What happens if you break? Because there's always two sides to a story. Well, if you get through 99.30 and not through these numbers, you could turn this trend on a dime right back down on you and capture these bulls. So I think 99.30 is the key number. In the cocoa market, I'm bothered. Like I said yesterday, I think this market's run out of momentum. I think that you started now a distribution pattern. You've lost the embedded reading. Like in the corn, you can afford to lose it one day, but you must get it back the next day. Otherwise, you either have to go and re-embed again or work yourself down to further support. Where's the support if the market breaks through the 2440 level? I'm going to guess it's between 2400 and 2399, which is the combination of the 18-day average and the 100. And today, by one tick, the 18-day finally got over the 100. It hasn't done that in a rather long period of time. It's had a crossover to the bear side right from here in August, and you did break hard. So this is sort of a reaction the other way. In the cotton, the battleground is the 18-day average of closes, and it is a market looking for direction. I say that because how many days in a row have you hit this number? You still have momentum drifting to the downside, bias up. The bulls grab control of this market, in my opinion, if you take out today's high. Then as long as you don't retreat back under today's low, they'll have higher lows. Then they'll try to get through, in my opinion, 61.13. If they can mount anything, way up here you have the resistance, 62.73 to 63.12. Let's flip the story and give it equal billing. If the market gets over that 61.13 and reverses, especially under 59.58, you're putting into play the lower Bollinger Band. So it's an interesting point on the chart. In the cattle market, be cautious here. This market has now got an outside day up, a reversal, outside day down. A reversal, some might say, I don't think it's a key reversal because it didn't take out this high right here by 2 points, big deal. But you're back to the 100-day average. You are embedded. So even if you pull back until that red line gets under the 80, what I'm saying is you might be able to, if you're bullish, there might be better opportunity at lower prices as long as you keep the embedded reading alive. I'm a bit worried about the feeder cattle. The way that this drop occurred and the market at the low of the day, you might be coming back in the line for this 138.40, the 100-day average of closes. Again, until you lose the embedded reading, it's not lost. I see it come down here, kiss that 80 level, and turn back up. But I do think by day's end, we saw some people taking money off the table that had been long in this vertical price rise. In the hog market, obviously it's a very difficult market to want to fade as you've got the Chinese coming into town, and we know that there's more cases of swine flu. The Philippines has just enacted a law where local farms don't report it, it is a government crime, and you don't want to be in trouble there. That's not the best place you can be in trouble. And the market is stalling against the 100-day average of closes. So you put it together, it's an interesting time, and as I said, if you're sometimes looking for that little bit of a push on your trade, maybe I can offer you some ideas first thing in the morning. Typically at 6 a.m. in the morning, I've got my computer to the point where I'm recording 40 charts on futures, 5 on ETFs, and I'm going to go through the morning fundamentals with you, reports coming out. But as a chartist, I'm going to be taking this market from what I learned on the charting ideas. And charting ideas are what this is about. The charts will look this way, not the way that you're seeing the ones behind me. They'll be black with more studies than you see here. We're going to talk fundamentals, technical analysis for sure, points of entry, exit, profit objectives, stops, and where my idea is completely wrong in the marketplace. And that happens. You can't get away from it. The key is discipline in trading because you're trying to catch on. So if you're a grain trader, a meat trader, you don't have to watch these other parts of the video to get there. There's a slide bar on the bottom. Just pull it. It's going to light up in the words, stock indices, foreign currencies. You're going to get then the meats, grains, the softs. They'll all be there for you. And on the side, if that's too difficult, just click on the name on the side. It'll take you right to the beginning of that section. The idea here is to give you what I'm seeing, maybe help you with your own trade thoughts on it. I will talk like I did today. Sometimes I'll mention hedging. Sometimes it'll be speculating. It goes all over the board. How do you get this and how does it work? Well, it's pretty simple. Number one, as I said, it's a subscriber video. You're not going to go on the internet and find it anywhere but on my website or in our free, and the word is free, mobile platform that comes as all part of the price. $7.95 for 30 days. Now think about it. A tick in corn is $12.50. What is a cattle tick? I mean, I've priced it intentionally under a minimum tick. And the rationale there is maybe this is something you'd want. After that, yes, it goes up to $15 for every 30 days, or you can buy up front a year subscription, $156 paid up front. That's equal to $13 every 30 days. So where do you find this? Go to our website, www.iraepstein.com. Under the word research, morning subscriber video, it explains everything, and that's where you can sign up. You can click here to get there as well if you're watching me on YouTube. I'm Ira. You have a good day.